Hi, my name is Steve Plotnick, and our presentation is to show you how to take your U.S. Retirement account and be able to take it, to withdraw from it tax-free and bring it into your foreign country. Now, in order to do this, you have to have a U.S. 401k or a U.S. IRA. You have to be non-resident alien, and you have to live in a country that has an agreement with the United States called the tax treaty, and you'll have to be able to present some documents as well. Now, a non-resident alien is someone that came here on a work visa, on an H visa or an L visa, or a green card person that surrendered their green card, or a U.S. citizen that renounced their citizenship. Those are non-resident aliens. And then you have to live in a country that has a tax treaty between your foreign country, your home country, and the United States. If you happen to live in a non-tax treaty country, there are some options to reduce the tax liability, but it wouldn't be tax-free. Now there's two ways to be able to have this withdrawn tax-free from the U.S. government. One way is that we would contact your financial institution, your plan administrator, prior to withdrawing it, presenting the tax treaty. We also present our opinion letter and some more documentation, because the reality is they're going to be on the hook if they don't withhold the 30%. So they're usually, in my experience, pretty strict on proving to them why they shouldn't withhold the 30%. Now, another way to do this is let them go ahead and hold the 30%, and then what we will do in the following year is request from the U.S. government, the IRS, and get back the 30% by presenting to them the tax treaty, our opinion letter, and some of the IRS codes, and get you that money back. Now, keep in mind that we may be able to get it out of the country for you tax-free, but however, you may have some minimum taxes to pay in the foreign country you live in. If you happen to be a U.S. citizen, you get taxed on your worldwide income. But if you live in a foreign country, I would say 95% of the foreign countries tax their residents on a territorial tax. And what that means is you got to be living in the country, and you're going to pay taxes on any income that you earn. They don't care if you have an account in a foreign country that is pre-tax or after-tax, but if it's an account that's getting interest or dividends or growing in value, you may have a tax liability. And it's going to be a very small amount compared to paying that liability here in the United States. And then there is a unique exception for somebody that's a non-resident alien that's under 59 and a half. There is a private letter ruling that you can use in addition to the tax treaty to make sure that there is no 10% penalty for being under 59 and a half. Now, we're a boutique firm. We're an international tax firm, and that's pretty much all the work we do. For this type of service, you're engaging us to help you out, get your IRA out tax-free. And if we're unable to accomplish that, we don't feel we should charge our fee. So we make some promises to you to be able to accomplish what you're engaging us to do this for you. Now, once again, my name's Steve Plotnick. On the screen there is our phone number and my email. If this is something you'd like to talk a little bit more in detail about your situation, feel free to give us a call. Thank you.